If you have over $200,000 sitting stagnant in your bank, retirement account, or home equity, then you're literally losing money. On this show, you learn how to get that money working for you consistently and conservatively. Learn to grow your nest egg with your host, Shawn Winslow. Let's dive in.
What's going on, everyone? Welcome back to another Finance Friday episode. I'm your host, Shawn Winslow, and this is the Multifamily Money Podcast. What is going on? You guys know the drill. Every Friday, we're coming at you with personal finance tips, tricks on how to get your money working for you harder and smarter. Because after all, we all know it's not what you make, but what you keep. And today, I'm coming at you with a quick one here because we know it's crazy right now, right? Interest rates are going through the roof, a lot of geopolitical risk. If you look at the bond market, it's the highest it's ever been down nearly 23% year to date. Before that, the worst year was about down 3.8%. Bond market's just getting crushed, right? Long duration products, fixed income products are just getting crushed, right? We're seeing inversion. We're seeing where, shorter duration bonds are actually yielding higher than longer duration, which, that's why it's called inversion, because that's not how it usually happens, right? You usually get paid a higher return for longer duration because there's more duration risk, right? Like over time, more things can change than versus short duration. So you get paid for that risk. Well, right now they've flipped and things have inverted. So you're actually making a higher return on short duration products. And seen the stock market down about the same, about 23%. Fed's talking about raising rates. If we looked back at the terminal rate that the Fed was projecting earlier this summer, they were projecting about 3.5% for their terminal rate, and now that terminal rate is about 5%. So we're going to see more rate hikes, definitely this November coming soon, and most likely in December. But I wanted to get on here and it's like, okay, Shawn, well, what should we do with our money, right? That's what Finance Fridays are for. Like, what should we do with our money? And obviously, you could put it in a savings account. Savings accounts right now are yielding about 2.5% to 3%, depending where you look and where you go, which is not a terrible option, right? Now you might say, well, yeah, but inflation is going to crush it. Well, if you don't put it there and you just leave it in a checking account, it's going to get crushed even more, right? And we have seen inflation flatline a little bit month over month. So there is that. Obviously, I'm not saying it's going to drop. There is an argument that, it's kind of the dead cat bounce, right? Which we've seen. If you look back in the 1940s, it did the same thing where it peaked and then dropped and then went to a higher peak right after to then eventually dropping. So we could see that as well. But I want to get on here because I think everyone should be taking a look at T-bills. And if you're not familiar with the term, it's treasury bills. So the bonds that the Treasury Department, the government puts out, specifically the 3-month T-bill. Right now, it's yielding anywhere. It's been fluctuating between 3.8 to 4%. I think this is a great way to put your cash in, your short-term cash. Maybe you're looking for your next investment opportunity, real estate deal, but you're taking your foot off the gas a little bit currently because you want to see where what the Fed's going to do, where the dust is going to settle. Well, don't just keep it in cash. Put it in a T-bill. T-bill, is annualizing about 4% right now. It's about, it's hard to say it now because there's so much uncertainty in the market. But traditionally, T-bills, are the safest, and I say that in quotes, safest investment out there because they're backed by the federal government, and they, especially the shorter duration, right, 3 months, they're gonna pay that back. They raise it to fund the government, right? And so they're issuing more now, and I think it's a great time to buy. So 3 months from now, we're looking at beginning of next year, and we might see some opportunities, and you can always buy another round of 3 months T-bills, and that's just a great way to kind of hedge inflation risk right now to a degree. Keep your money working a little bit with a little more security until we know where things settle. So guys, this is a short episode. I just think it's a great place to put some cash. I'm going to be doing it, not a large portion, but what I do have, obviously this is a time where you do really want that reserve fund, that 6, usually you say 3 to 6. I would say 6+ at this point. It's good to have a 6-month reserve, but outside of that, put some money into T-bills. And you could even take, half of that reserve in 3 months and put it in there because, within 3 months, you're going to get it back. But I would definitely, you want that cushion of that rainy day fund, whatever you want to call it, 3 to 6 months. And then I would take any other cash that you're not looking to really dump into either the stock market or real estate right now and put it in a T-bill. T-bill, a 3-month T-bill, 3-month duration, you're getting about, like I said, 3.8 to 4%, better than any savings account. But to me, that's a great savings account type of tool to use. So guys, thanks for tuning in. I hope this was helpful. Just want to get everyone's money working for them harder and smarter. So after all, easy doesn't pay well, and instant gratification is self-destructive. So you got to get out there and not only work hard for your money, but have your money work hard for you. And this episode hopefully gave you a strategy to do that, because we all want to create the lives of our dreams so we can get out there and make this world a better place and do it together. All right, everyone. Thanks for tuning in. I'll catch you on the next one.
Hey, this is Shawn Winslow. After being in the financial service industry for years and having candid conversations with good people just like you, I realized that so many of us are wanting an investment strategy that provides solid returns and consistent income without the bumps in the road. There's little known secret that your financial advisor doesn't want you to know. There is investment out there that is less volatile and the returns are stronger. Get more details by going to greenbriercg.com and clicking on the free e-report. And by the way, if this show has provided you any value, then feel free to leave an honest written review and of course share it with a friend who needs it. See you next week for another great show.